Is dividend investing right for you? As this is the time to get your money sorted, get that cash flow rolling, and fly yourself all the way to super rich status. Dividend investing is one way to get you there. If you can't get a lot of capital in, this is a way just to slowly build your way to financial freedom. There's plenty of investment tools out there, but for people that like dividend investing, this is the video for you, right here at Barry Charles. Welcome to the channel, guys, and dividend investing is what we're talking about today. Should you invest into dividend stock? Well, first off, what is a dividend? Basically, a company that has free cash flow that they don't know what to do with it, and they say, here you go, let's deliver it out to our shareholders as a thank you for being the owner of our business. Now, there is pros and cons to this and all this, but let's just look first at the pro. So the pros, you get cash every 3 months, 6 months, or yearly, depending, even monthly, depending on the company. Most of the time it's every 3 months, or biannually, every 6 months. But you have other ones that are every month, which they're called REITs, which is more real estate investment, dividend investing. So that's just one type of dividend investing. But getting back to just dividend investing, what makes you money? So every 3 months, the company will give you some money, which you can then either put back into the company or look for another investment to put it into, or you can take it out. This could be money for your house deposit, if this is something you're looking at. How are you going to do that? So dividend investing, okay, it's a slow build. It can be a slow build, so you could have $1,000 and start from there. But dividend investing is more important if you've got 100,000, 50,000. It's still important down the bottom, don't get me wrong. But if you've got the big bucks, dividend investing is one way to just put money into one stock or a few stocks, take that dividend money, take that paycheck and live off it. Now that is the dream, but how do we get to this dream? Now, this is why I say you need to put the big bucks. So if you've got 3% in the company, I mean that's the dividend yield that they're paying, and you've got $1 million in it. How much do you get from that $1 million a year? Well, at 3%, you got a long way to go, baby, to get to $1 million. So yeah, 3% yield. So yeah, 10% of that is 100,000. Yes, 100,000 is 10% of $1 million. So 30,000 basically is what you're going to get a year. 30,000 a year is what you're going to get. If you go to 10%, for instance, it's 100,000 a year. 5%, 50,000. So you can see the difference in the investments. So that's why you got to look at the risks involved in dividend investing. Now there is dividend investing that is over 10%, and generally that means that company is very low growth, stagnant, but could be a short-term play for you over, say, a 5-year horizon, or maybe 10 years if you want to get to 100%. So if you put $1 million into one stock that's at 10%, in 10 years time you made $1 million. Thank you very much. Now that's where people start to try to invest, but you can go into dangerous territory if that company is losing growth and losing market share. So just because it's paying a dividend doesn't mean it's the right thing for the company. Sometimes a dividend is not good for the company because they could be using their money to reinvest. So that's where it comes in. The cons of dividend investing is that they should be, most companies, if they're good, should be using that dividend to reinvest into their company to grow and grow and grow. Now that's why most dividend companies are very solid companies that haven't got much growth. It's not always the case. You've got companies like Apple that are growing, Domino's Pizza, they're growing as well. But on the flip side, their dividend yield is like less than 1%. So you're not really getting much of a dividend yield out of those companies. Also, another con of dividend investing is the tax man. So you're getting 15% tax on your money every time the dividend comes out. And then if you live in a different country from the US, or if you're investing in a US stock, for instance, and you're in Australia, New Zealand, Canada, doesn't matter where you are in the world, you get taxed again by your own government. So that's just something you have to deal with dividend investing. But to me, what should you do if you want to be in this type of investing? What should you do? Is dividend investing even worth considering? To me, it's not going to be the biggest growth. You will make more money in, say, like growth stocks that are still moving up and up and up, like Tesla has in the future, and Apple did it last year and Amazon had a big run up last couple of years as well. So those companies are going to make you more money, say in the short term, but a dividend stock can make you more money over time. Now, this is no guarantee because companies like Disney and Carnival Cruise Lines have got rid of their dividend, and it still hasn't come back for these companies since the Rona. So people were relying on these companies for their dividend, and then they got cut. And what happens when you cut the dividend out of any dividend stock? Price crashes, because these is about 10% or 20% of that. The people in that company only had it because it was a dividend stock. And once the dividend went away, they ran for the hills and invested somewhere else. So that's the danger of cutting a dividend from your company. But it can be a good thing, because sometimes the company needs the money because they're getting a bit cash strapped. And you not getting that dividend keeps the company in business. Now, that's what some companies have done, and now they're starting to come back. For Disney and CCR, for instance, they still haven't returned their dividend to their investors. Or say a company in New Zealand, Air New Zealand, haven't given back their dividends, and they're not going to for 5 years. So it's a hard line to stay in, and that's why there's been a lot of selling in that stock in New Zealand. But for people out there, check out that stock. I think it's worth investing into, and I think you will easily double your money in 5 years' time. It's not a short-term play at all. It's definitely a long-term play. But with it being so low, I expect it to just go boom. Once the dividend returns, it'll go straight back to $1.50 stock. At the moment, it's about 70. Just something to look into. And I have some information in some of my other videos on the New Zealand stock if you're investing in New Zealand or around the world. But back to dividend investing. What should you do? What play should we look at if we want to invest? Now, there's a few ways to play dividend investing. Now, for me, there's a couple of things for me. Dividend and growth investing at the same time. That is where I like to be with the big part of the portfolio. It's not my whole big part of the portfolio, dividend and growth combined. And where have I gone? Where for me, this is not financial advice, it's just something to look at. What I've looked at is a company like Apple. They're not going nowhere anytime soon, and they are still growing bananas. Now, there's a risk with Apple. That's what I keep telling you. A smartphone's always going to be around. That is the question you have to think to yourself. Can some new technology come out and see later smartphones? As I've repeatedly said on the channel, you've got to look in depth into these things. What could make Apple disappear? And that's the virtual reality part. I know this is pie in the sky stuff for a lot of people. But one day, when we're babies, we all get microchip, and then we can see everything from our eyes. And like a big invisible screen will come in front of us, and we can look at Google through there. And there will be no need for a smartphone anymore if that was the case, if you can do the dialing and all that. So that's just something you got to think about. You got to look at outside the box of where companies could crash and burn. If some new technology comes out that makes something obsolete, you look at vinyl, you look at CDs, you look at tape. They've all been replaced by new technology, and you just lost a gold mine of money right there if you're in those companies. And if you look at VHS, you look at Blockbuster, disappeared off the face of the earth, and now Netflix is starting to get into that transition phase, so they're starting to lose money. It's the online streaming space going to disappear, and I mean, it's not going to disappear anytime soon, but the market share and the cost of running those companies are not cheap, and Netflix is really finding that out now, and they're trying to cut costs. So, getting back to the point of dividend investing, growth and dividend is my play. It's how I like to go. So, a company like Apple is perfect for that sort of thing. Domino's Pizza, same sort of strategy there. There's a whole lot of companies out there, Microsoft. There's plenty of them you can look at. Other companies to look at, Teradyne, that was a company that you could look at dividend and thing, and they're really grossed up. I'm not in it now. I used to be in it, but didn't really have enough in it to be worth keeping going with it, but it's definitely a company that was interesting and did get some good growth. But yes, the 10% stocks. Now, I'm not going to recommend any because that's not the way to be. But there are opportunities at that price around 10%. If you can find them, there are some good ones in there that can possibly be your long-term play. Now, I have a couple of them, but they're not big portfolio. That's what I'm saying. They're more riskier, but they give me a chance to try and double my money in 10 years on those investments. If it does that, then I'm happy. Now, but I don't see the growth in the stock price, so I'm only looking for the dividend in those bigger plays. Where in the, let's say, 3% lower bracket, I'm looking for growth and dividend, because the dividend's too low to be worth it. But if you think the growth of the company is going to be double or 2x for the next 5-10 years, then that's a good opportunity for me and for you out there looking for a dividend investment play. So can you go all in dividend investing? There's some people that do. I don't recommend it. I recommend it being a part of your portfolio, and definitely it's not a sure thing. No, don't get me wrong, dividends are not sure, they can get cut at any time, but they're a good safety net if you get into enough companies. I personally don't go into heaps of companies. I try to limit the companies I'm in and just focus on try to get as much stock in each individual company, and the companies I love and think are good future-proof companies, and just invest as much as I can depending on what my portfolio shape of each company I want in my portfolio. So what would you do? If I was you, say you only got $1,000 and you want to just invest into dividends? Well, I probably wouldn't even go this many companies, me personally, but if you want to be more diverse, 10 stocks, $100 each, and then over time just reinvest that dividend into those companies and keep going. Now there's another strategy in terms of the dividend investing to think about, and this is what I like to do with my dividend returns, is I wait for which company is on sale the most when I get my dividend at that time, and I invest into that company, the one that is the lowest and I think is the most opportunity in long term in terms of where the prices are currently. I invest into that company instead of doing the drip system where the money just comes straight back in and goes into that company. If you like that company and you want it to keep going in there, that's good, but then sometimes the stock price can be so high it's not worth it, in my opinion. Sometimes you could have a stock that's down 30% and it makes more sense to invest into that one because you're getting more of that company while it's at a lower price. So that's just a little bit about dividend investing. Now so long-term dividend investing, so where would you go? To me, I think you only need 5 stocks. If you maybe 10 if you're just going dividend stocks completely. There's heaps of different strategies in terms of how you can invest. If you're just going dividend stocks, maybe you need 10 and have 10% in each one. You might have one company that could be 20%, like an Apple or whatever company, Microsoft, any of those bigger companies that you think are going to be there for the long term. But make sure 1 or 2 of those ones are at the 10% bracket, so you're at least getting some decent dividend money to reinvest into some other companies. For me, dividend investing is a very safe. It's not bulletproof. No investing is bulletproof, no doubt about it. But definitely, if you get into the right stock while they are going well, they can be a good long-term strategy for you. And I think especially when you get into the older age bracket and you've made your wealth and you're looking to continue to keep their wealth going, you put that money into some dividend stocks and you live off the dividend. So as I said before, for the people out there at the $1 million bracket and you're investing just into one company, if you say you got 5% dividend coming, you could get $50,000 a year and you don't even have to work. So that's what people try to do in terms of investing. That's definitely one of my goals one day, to get up to that, and that's just in dividend. You gotta have your ideas of where you want to go. You can't just sit and say, oh yeah, we'll just mingle around here. You gotta look at the direction you want to go with your investment. For me personally, I would like to actually get to more. I'd like to probably get to 2 million in dividend stocks alone. Now it's a long way to go. Like a lot of people, we're still learning as we go along. You're always learning as an investor. If you're not, then you're more likely going to lose money because you're going to get too lazy and then don't realize what's actually happening in the market, and one of your stocks has had enough and is going downhill depressively, and then they cut the dividend and then the stock price goes down lower and lower, and next minute your company's down 70-80%, as we've seen with a lot of companies lately. Some of them are not worthy of dropping that low, but some of them are, because they're just not a good business model. So there's just something to think about when you're dividend investing. You got to make sure the company is still growing. You don't want it to be stagnating. It's at least got to be growing a little bit, so it's just going up steadily. That's fine. But if you've got a company that's on a decline or just stagnating, then that's when you get into the higher dividend yields, and that's when you get into a bit more danger in terms of the company getting rid of the dividend or the company going bankrupt. So that is dividend investing for 101 for you out there. I hope you enjoyed the video. Remember to subscribe to the channel. Smash the like button, because you are amazing out there. I will be back again for another video very soon. Take care out there.